Silver versus gold. One will explode, the other will protect you. Sit back, relax, and get ready. Because today we are diving into one of the biggest investment debates happening right now. Hello everyone, my name is John and welcome back to the channel. What if I told you one metal could protect your wealth while the other could explode in value? Across America, investors are asking the same question. Should you choose gold or silver? Markets are volatile, uncertainty is rising, and smart money is making strategic moves behind the scenes. Gold has been the ultimate safe haven for centuries, but silver is gaining attention for its explosive potential. Is silver about to outperform gold, or will gold remain the king of protection? Today, we break down the real differences, the risks, and the opportunities investors must understand. You will discover what experts are saying and what history reveals about these two powerful metals. Stay with me until the end, because this comparison could change how you think about investing forever. The big question. Investors are asking. The biggest question investors are asking right now is simple but powerful. Should you invest in gold for protection or silver for explosive growth? Markets are moving fast, uncertainty is rising, and many investors feel like they are standing at a crossroads where one decision could shape their financial future. Across the United States, financial channels, analysts, and everyday investors are debating this exact topic because precious metals have returned to the spotlight in a way we have not seen in years. Rising inflation concerns, interest rate uncertainty, geopolitical tensions, and fears about the long-term strength of the dollar have pushed more people to look beyond traditional investments and toward hard assets like gold and silver. But here is where the debate becomes intense. Gold and silver may belong to the same category of precious metals, yet they behave very differently in the real world. Gold is often seen as the ultimate shield, a metal that protects wealth when markets fall apart. It has thousands of years of history as a store of value, trusted by central banks, governments, and institutional investors who seek stability when everything else feels uncertain. Silver, on the other hand, carries a completely different energy. While it also holds monetary value, silver moves faster, reacts stronger to market changes, and is deeply connected to industrial growth. From solar panels to electronics and emerging technologies, silver sits at the intersection of finance and innovation, which makes its price movements more explosive, but also more unpredictable. This creates a powerful dilemma for investors. Do you choose safety or do you choose opportunity? Should you protect your wealth against potential economic storms or position yourself for aggressive growth that could deliver higher returns? These questions are not just theoretical, they are shaping real investment decisions happening right now. Another reason this debate is gaining momentum is the recent volatility in metals markets. Sharp price swings have caught the attention of Wall Street and retail traders alike. Some investors believe these movements signal the beginning of a historic rally, while others warn that volatility brings risk and requires careful strategy. What makes this moment even more interesting is that both metals are attracting different types of investors. Large institutions and central banks continue accumulating gold, reinforcing its reputation as a defensive asset. Meanwhile, many individual investors are turning towards silver, hoping to capture the kind of rapid gains that smaller markets can sometimes deliver during strong bullish cycles. So the real question is not simply which metal is better, but which one fits your goals, your risk tolerance, and your vision of where the economy is heading next. In this video, we are going to break down the real differences between gold and silver, explore why one is known for protection while the other is known for explosive potential, and help you understand how smart investors are thinking about this decision today. Because when markets become uncertain, the difference between protecting your wealth and growing your wealth becomes more important than ever, and understanding that difference could change how you invest forever. Why gold protects wealth. Gold has earned its reputation as the ultimate protection asset over centuries of economic cycles, financial crises, and market uncertainty. When investors feel unsure about the future, when currencies fluctuate, or when stock markets become unstable, gold often becomes the first place people look to safeguard their wealth. This is not just investor psychology. It is deeply rooted in history and supported by how institutions and governments behave during times of stress. Unlike many other assets, gold does not depend on corporate earnings, technological trends, or economic growth to maintain its value. Instead, it acts as a form of financial insurance. When inflation rises and purchasing power weakens, gold tends to attract attention because it holds intrinsic value that is not directly tied to any single country or currency. This independence gives investors confidence that gold can serve as a stabilizing force inside a diversified portfolio. One of the strongest signals of gold's protective role comes from central banks themselves. Around the world, central banks continue accumulating gold reserves as a strategic asset. These institutions are not chasing short-term gains. They are focused on long-term stability and protection against systemic risks. When governments increase gold holdings, it sends a powerful message to the market that gold remains a trusted store of value even in the modern financial system. Another reason investors view gold as protection is its relatively lower volatility compared to other commodities. While gold prices do fluctuate, the moves are generally more controlled than what we see in assets like silver or cryptocurrencies. This slower, steadier movement appeals to investors who prioritize preservation of capital rather than rapid growth. In uncertain economic environments, many investors are willing to sacrifice explosive upside in exchange for stability and peace of mind. Gold also plays a psychological role during crises. When headlines talk about recession fears, geopolitical tensions, or currency instability, gold demand often increases because people associate it with safety. This demand can create a reinforcing cycle where rising interest in gold supports its price, further strengthening its reputation as a safe haven. However, protection does not mean zero risk. Gold can still experience corrections, especially when interest rates rise or when the dollar strengthens. Higher interest rates can make non-yielding assets like gold less attractive compared to bonds or other income-generating investments. This means investors must still understand the broader macroeconomic environment when deciding how much exposure to gold makes sense. Despite these challenges, gold continues to stand apart as a defensive asset designed to preserve purchasing power over time. It is not typically the metal investors expect to deliver explosive gains overnight, but rather the foundation that helps protect wealth during unpredictable market conditions. Understanding this protective role is essential before comparing gold with silver because the purpose behind owning gold is fundamentally different. While some assets are chosen for growth and aggressive returns, gold is often chosen for resilience, the ability to hold steady when everything else feels uncertain. And this difference sets the stage for the next part of the debate, where the focus shifts from protection toward potential explosion and rapid movement. Why silver has explosive potential. Silver enters the conversation with a completely different personality compared to gold, and this is where the investment debate becomes truly interesting. While gold is known for stability and protection, silver carries the reputation of being more aggressive, more reactive, and potentially more explosive in terms of price movement. Investors who look at silver are often not just thinking about safety, they are thinking about opportunity and momentum. One of the biggest reasons silver behaves differently is its dual identity. Silver is both a precious metal and an industrial metal, meaning its price is influenced not only by investor sentiment, but also by real-world demand from technology and manufacturing sectors. Silver is essential in solar panels, electronics, electric vehicles, medical equipment, and advanced infrastructure tied to the modern digital economy. As global industries expand and transition toward clean energy and high-tech solutions, demand for silver increases, creating strong, long-term bullish arguments. Because the silver market is smaller than the gold market, even small changes in demand or investor behavior can lead to large price movements. This smaller market size makes silver more volatile, and volatility is exactly what attracts traders and investors who seek higher returns. During strong bullish cycles, silver often outperforms gold on a percentage basis, delivering faster gains and capturing attention across financial media and YouTube investment communities. However, this explosive potential comes with risk. The same volatility that allows silver to rise quickly also means it can fall sharply during market corrections. Investors need to understand that silver's price swings can be emotional and dramatic, driven by speculation, industrial demand changes, and shifts in macroeconomic conditions. For some investors, this creates opportunity. For others, it introduces uncertainty that may feel uncomfortable compared to the steadier behavior of gold. Another factor that makes silver appealing is its accessibility. Because silver is generally priced lower per ounce compared to gold, many retail investors find it easier to accumulate. This accessibility has created a strong online community of silver enthusiasts who believe the metal is undervalued relative to gold. Discussions about supply deficits, rising industrial consumption, and the possibility of a future silver squeeze continue to fuel enthusiasm and debate. Silver also tends to shine during certain economic phases. When economic growth expectations rise or when commodities enter bullish cycles, silver can benefit from both investment demand and industrial usage simultaneously. This dual driver creates scenarios where silver accelerates faster than gold, reinforcing its image as the metal with explosive upside potential. Understanding silver requires accepting that it is not designed to behave like gold. It is more sensitive to economic changes, more reactive to market sentiment, and more capable of delivering dramatic price moves. For investors willing to tolerate higher volatility, silver represents the possibility of stronger gains, but it also demands greater awareness of risk management and timing. This contrast between protection and explosive growth is what makes the gold versus silver debate so compelling. One metal offers stability and resilience, while the other offers speed and potential acceleration. And deciding between them depends entirely on how investors define their goals and their tolerance for uncertainty. Future outlook. Which one wins? Looking toward the future, the real debate between gold and silver is not about which metal is universally better, but about which one performs stronger under different economic conditions. Investors must understand that market cycles shift constantly, and the metal that leads during one phase may lag during another, depending on inflation, growth expectations, and monetary policy changes. Gold's future strength is closely tied to uncertainty, currency stability concerns, and central bank strategies that focus on protecting national reserves from systemic risk. When fear dominates financial markets, or when investors seek security against unpredictable events, gold typically gains momentum because it represents stability rather than speculation. Silver's future outlook is driven by a unique combination of industrial demand and investor sentiment, making it highly sensitive to technological expansion and global manufacturing growth. As renewable energy, artificial intelligence hardware, and electric vehicles continue expanding, silver could benefit from structural demand increases that support long-term bullish expectations. One of the most important factors shaping the outlook for both metals is interest rate policy, especially decisions made by the Federal Reserve that influence liquidity and investor behavior worldwide. Lower interest rates often support precious metals by reducing the opportunity cost of holding non-yielding assets, while higher rates can slow momentum but may not eliminate long-term demand. Another key influence is the strength or weakness of the US dollar, because precious metals are typically priced in dollars and react inversely to currency movements. A weakening dollar can boost gold and silver prices as investors look for alternative stores of value, while a strong dollar may create temporary pressure but rarely changes the structural demand story. Market psychology also plays a powerful role in determining which metal leads during a specific cycle, because investor sentiment can amplify trends beyond what fundamentals alone might suggest. During bullish momentum phases, silver often attracts speculative capital due to its higher volatility, while gold tends to gain steady inflows from conservative investors seeking safety. Experts often suggest that future performance may depend on whether the global economy moves toward recession or expansion, as each scenario favors different characteristics of precious metals. Gold may outperform during financial stress or economic slowdown, while silver could lead during periods of industrial growth and commodity-driven expansion. Another emerging factor shaping long-term expectations is the ongoing transformation of energy systems and technology infrastructure, which may increase silver's strategic importance as an industrial resource. At the same time, geopolitical uncertainty and shifting global alliances continue reinforcing gold's role as a neutral reserve asset trusted by governments and institutions. Ultimately, predicting a single winner between gold and silver oversimplifies a complex market reality where both metals serve different purposes within a diversified strategy. The smartest investors recognize that future success may not come from choosing one over the other, but from understanding when protection is needed and when explosive growth potential becomes the priority. After exploring the full debate between gold and silver, one thing becomes clear. This is not simply a competition between two metals, but a strategic decision about how investors position themselves for the future. Gold represents protection and stability, while silver represents growth, potential, and explosive opportunity driven by market momentum and industrial demand. Throughout history, smart investors have recognized that markets move in cycles, and different assets perform better under different conditions. Gold often shines during uncertainty and crisis, while silver tends to accelerate during economic expansion and strong commodity trends. The real lesson is that successful investing is not about blindly choosing one metal, but understanding your goals, risk tolerance, and timing within the economic cycle. Some investors seek the safety of gold, others pursue the aggressive upside of silver, and many experienced investors combine both to create balance. As the global economy evolves with changing interest rates, technological growth, and geopolitical shifts, precious metals remain important tools for diversification and long-term strategy. Staying informed and understanding the bigger picture helps investors make decisions based on logic rather than emotion or hype. If you found this analysis valuable, make sure to subscribe to the channel and turn on notifications so you never miss future updates about gold, silver, and global markets. Sit back, stay informed, and join us as we continue exploring the strategies that smart investors use to navigate changing financial landscapes.